I did this 2 years ago. So those that have been with the Indian Equity or the NABA program for a while, I did this a few years ago, so I'm just going to be doing the same spreadsheet and assumptions / stories. So we have a client who, this is a little background, okay? So we have a client who has a passion for owning her own food truck or trailer and is going to apply for the Indian Equity Fund grant. She found a trailer for $10,000 and will spend $4,000 for inventory on food. She has her business plan and she needs assistance in preparing cash flows for the first 3 years to find out if the operation is profitable. I'm going to use the following information to assist the client in the preparation of the attached cash flow worksheets that you see on your screen. And I will point out there is an assumptions tab on the bottom. And when you work with your clients filling this out, or make sure they do the assumptions, because that helps really big when you do the evaluation of the grants. And you can see how they arrived at their information or how they arrived at their sales. And the spreadsheet that I'm using is the one found on Submittable. So your clients will be able to download that and fill out this exact spreadsheet. So again, Sarah plans to apply for $14,000 Indian Equity Fund grant. And if awarded, she plans to open as soon as she can. And assume Sarah already owns a pickup truck, so she will not need any additional financing for that. And Sarah, sorry, assumption. So Sarah assumes she'll go to 15 events per month and she plans to sell 65 entrees at each event at an average retailer price of $10.50 per entree. So in beginning sales right here, will come down, and this is where I'm going to use my assumptions for today, but then they would put it over in the assumptions tab. So she plans to go to 15 events per month, sell 65 entrees, and have a sale price of $10.50 per plate. So to calculate sales, and that's just an assumption based on historical data or other food trucks in the area, because I recommend that my clients reach out to them, and most of the time they'll share that information, what their sales are. So that's kind of what we do for industry standards in our area. So we're just creating a formula. So 15 events at $65 or 65 plates at $10.50. So you can see your sales are $10,238. So we'll go ahead and create the formula or link it up. So you'll create the formula and link and hit F4 so it stays. And I'm just doing this. Some cash flows may have 6 months of operations, but for this exercise, I'm assuming she's going to operate year round. And feel free to ask any questions as I'm going through this. And so you can see now that she has $10,238 for cash sales each month for the years. And this spreadsheet calculates the 3-year projections for you. Purchase inventory, we can see that it defaulted to 48% for cost of goods sold, but for industry standards that I can pull up through Profit Sense, Mark, I know you have access to this also through the SBDC. We can get out industry standards to see what the cost of goods sold should be for a food truck. And when I looked it up, this industry for a food truck was 40%. And so purchase inventory, we're going to take 40% of our sales. And you'll see that to replenish supply as each month as you sell, she's going to need to spend $4,095 per month. Any questions so far? Perfect.
So Joel?
Yep. Oh, go ahead, Mark.
So you know, if you want to make it seasonal, that formula just follows with it. Your COGS formula.
Yep.
So you just punch in, say for May, if it was, you had a couple of bumps in graduation or something like that. For May, you might have $12,000 in sales. So your COGS would follow that.
Yep. So if she did have some additional sales, I'll go ahead and type in 12,000. As you can see, the cost of goods sold is now 4,800 for that month. And some months may be slower. When I work with my clients to produce these projections, I make them answer if their business is seasonal, because a food truck's going to be busier during the summer months, maybe slower in April or May, than pick up due to tourism or the different events, powwows that they go to during the certain months. So their sales they shouldn't flow it straight across. They should vary slightly. Some clients just divide it. Most of them do actually just divide it straight across, but I like to see some variance in there. So say they do weddings too in August. So they sell $15,000 in sales. It bounces their cost of goods sold up to 6,000. Okay, perfect. Question mark. And so she is going to employ one employee, and they're going to get paid $9 an hour and work roughly 45 hours a month. So again, one employee at $9 an hour and 45 hours per month. And the reason I type my assumptions down here and create formulas, because then if we're fine tuning this or modifying it, it will quickly update the cash flow projections. You don't have to input and manually do each one. I guess I made a mistake. She's going to work 45 hours per week or 40 hours per week for 4 weeks out of the month. Be correct. Get the payment. Sorry about that. Okay, so $14,000 per month she's going to make. Yep, so we'll go ahead and underneath gross wages and enter that amount per month that she'll make, the employee. And then payroll taxes are figured out 15.3% for that employee, so just 15.3%. And that's of the gross wages. And that's the normal for each employee, what it costs for that business owner to pay that employee's payroll taxes that they're responsible for. Any questions so far? And during the operating season, office supplies are 3% of sales, repairs and maintenance are 2.4% of sales, and utilities are 4% of sales. And how I got those again is the industry standards or RMI data, and it's a percentage of sales. So that's just what the industry is after they survey all the businesses. I see there's 2 questions in the chat. Let me check.
About the spreadsheet. I think I can send a copy of your spreadsheet, Joe, if that's okay, to the individuals who like to use it specifically. And yeah, this might be on YouTube, James, after for recording. And I hope it doesn't cap at 40 minutes, but yes, but to both of those questions.
And I will I can send you to Luke, the little scenario that I have typed out that I'm reading off. Should have done that before, but yeah, I'll send that out so then they can recreate this. Okay, so again, we'd calculate a payroll expense at 15.3% of gross wages. And professional fees, we had said that they will be 2% of sales. Utilities are 4% of sales. Repairs and maintenance are 2.4% of sales. And then office supplies are 3% of sales. And again, those are industry standards, and that's a good rule of thumb, and that will go in the assumptions page too. So you would just go ahead and write in, say, professional fees, and you just say those are 2.4% of sales. So I'll go ahead and calculate those. And again, like Mark pointed out earlier, if the sales are higher, those percent for professional fees should go up too, but that's assumption. And that's proven that it will go up if you have increased sales because you're spending more money. And not on everything though, so keep that in mind. But like office supplies, if you have more events, more advertising, that will go up also. Browsers, give me 1 sec. Not sure what happened there. There we go. Okay, so I entered all of those. And during the operating season, advertising expenses roughly figured at $20 per month because they're only going to use social media and word of mouth advertising. So for 20 bucks, you can just go ahead and type in 20, or you can create a formula, however you would choose. And then for car delivery and travel, the easiest thing that I recommend to my clients is use the federal reimbursement rate, because that's proven. If they ever get audited and they keep a logbook, they can go ahead and put down the federal rate for mileage. And right now that is at 62.5 cents per mile. And we anticipate with this food truck, she's going to be driving 1,000 miles per month. So for the formula for car delivery and travel, we'll take the 1,000 miles per month times the 62.5 cents per mile. And she's going to spend $625 in mileage per month. And I do recommend when you do work with your clients for like insurance, have them get a quote what insurance will cost. And for this exercise, they got a quote at $720 per month for 12 months. So it is an annual plan, so they will be paying $60 per month even when they're not operating. And credit card services fee, make sure you put that in, and that's at 3%. Is roughly with like Square plus 10 cents per transaction, but we're just going to use 3%. And that's a percent of sales. So roughly $307 for credit card service fees. And keep in mind too, that some of this people will pay cash, some will pay by check, so they won't be that high, but always estimate high when you're filling out your projections. And she plans to take a draw of $9,000 per year. And as you can see, that's doable because she makes $27,000, but she's only going to take that owner's draw the year she is operating. So you just take 9,000 divided by 10 months. It's $900 a month. And that'll go underneath owner's withdrawal. So any questions? And that's just for the roughly the first year of your cash flow projections. Any questions so far? And if she does have to pay like rent, booth, lot fees, you would also include that underneath rent. For this exercise, I didn't include that. And as you can see on the spreadsheet that we use for this Indian Equity Fund, Over here is a easy formula to increase your sales per year and increase your expenses per year. And as you see, for years 2, it's 4%. Years 3, it's 4%. But for this exercise, let's just say she's going to grow 7% in year 3. But now inflation has gone up to 4%. And as you can see, it automatically will change the 2022, 2023 totals. So any questions on the cash flow sheet?
If they, in their assumptions, they wanted to, say, use 10,000 for supplies, where would that go?
So $10,000 for like additional supplies or?
Yeah, for startup.
So startup, so say they weren't going to use the Indian Equity Fund, but they're going to get a loan or other money or had money for $10,000, you would go underneath pre-project and put supplies in. But you have to show where you're getting the money from. It's either going to be cash sales or beginning cash. Otherwise, that's going to throw off your entire cash flow projection and it will carry forward into the negative because you don't have any
Okay.
cash going through. So it should match up above and on. Yeah, the liabilities and cash should equal for this exercise. It could be family and friends. So say she's going to get other cash. You'll just put that in. So then it equals the 10,000 equals the 10,000. It takes off the negative 10,000 going forward. Because we really just want to see the projections for this business to see if it's viable. And of course, I will say this, you can make projections however you want or however good that you want them to look. But that's why I say look at the industry standards and also just, like I said, the 15 events, 65 entrees at a price of $10.50 isn't unreasonable. And like I said, we can work, or I help work with the clients and we look at other businesses in the area and put that towards these projections. And if you don't, I said this last year, free Phil to call me too. And I do, sometimes I have clients do the break-even analysis to see what it will take to break even, but that's mostly just for if they're building or say producing a quilt to see how much they have to sell that quilt for. Food, I just look at it and I have them break down each food item they're selling and then times it by 3 to get that price to sell it at. That usually will cover overhead, employees, and the inventory. And as you can see down on the tabs of the spreadsheet that Luke will send out to everyone also, you can see that there's a 3-year income statement and it automatically fills the information for you. And that's good to look at too, just make sure your cash flow projection sheet is all intact and looks good. And then you can also get a rough estimate of the 3-year cash flow projection that it pulls over. And Mark, as you see, you can see that $10,000 going into the pre-project and then buying 10,000 for supplies. So it's taking it out. And then there is a flow chart to show your cash position at the end of each year. And having done this, I would say keep it simple and make sure you have those assumptions. So because I get a lot of applications that they just make the numbers up and they haven't let us know how they arrived at the numbers, and some of them don't make sense. Because when we look at it, we look at sustainability. Will the business be able to sustain itself wherever it's located? And then we really spend a lot of time on these cash flow projections. More so, and then we do review the business plan, but this is what a lot of the decisions are made off. Mark, do you want to add anything? Because I know you have helped for this for quite a while too.
Yeah, usually, well, yeah, with the startup or even people that are in business and they haven't had a bookkeeper yet, I always recommend finding a qualified bookkeeper. And that really seems to help with people that have been in business 2 or 3 years, but they really can't provide you with anything. Just to be a bona fide business is make sure you know a local lawyer if you're doing incorporated LLCs or anything like that. It's always recommended at least try to budget some money into that. You may not need it, but Those are the things that they should think about. And then with insurance and liability or bonding, we have a couple of local insurance companies that are pretty used to me calling them and referring clients over to them just to give them a good number, a good estimate on what that insurance is going to look like. And sometimes the clients aren't used to talking to those folks, but it's good to get that relationship going. And also a banker, just to let them know what they're thinking of they're doing. They may not be going in there for money, but just to establish that relationship. So maybe in year 2 or 3, they come back just for an operating note. They've kind of established that trust and in that rapport with the loan officer too. So it's good for that entrepreneur to kind of get that network. And that's where the Small Business Center or the NABA can be really important, is helping them establish that directory of people that they feel comfortable with talking to, that we've kind of brokered it for them and broke the ice. And I think that just kind of helps them succeed too, or at least it opened their eyes to what these other costs are going to be, not just serving a plate of food or welding or fixing or changing oil, really the primary part of their business, but all these other things they need to think about.
Good job, Mark. I just had a good question from K. Brownlee, but the PFS wasn't required last year. Oh shoot, I'm getting your meeting will end in 10 minutes. So, but no personal financial statement is required. I just encouraged it last year so they could look into getting a loan from the CDFI or the SBDC, but we don't have to do PFS, personal financial statements, this year.
And Luke, I will say this too, going off what Mark said, if it's an existing business and they happen to have either tax returns for the last 3 years or a profit and loss statements for the last 3 years, I do have a different cash flow projection spreadsheet that we built where we can put in that historical data and then it will project it forward too, based on the historicals. So that's an option that I can send out to anyone that needs that spreadsheet also.
Yeah, thanks, Joe. That sounds great. That would be great for those existing ones. So.
Yeah, that'd be good.
All right, everybody, any more questions? Something you don't understand or need more clarification on, anybody?
And Luke,
Yeah.
Can I say one thing? I know
Yeah.
This is a question I know this gets asked a lot. So do they need a full business plan or an executive summary?
Thanks, Joe. In terms of the business plan, they don't need a full business plan. Required is the executive summary. Additional supplemental is the business plan. If they'd like to, go that route and supply that, it's fine. It's competitive, so it helps, I guess. Helps us read through, helps the readers and evaluators look at it more thoroughly and understand what's going on, making sure they have this all filled out thoroughly too.
I know I went through it really quick. I just didn't want to get cut off.
And you did good. Yeah, thank you for kind of expediting it. I guess I got to contact IT going forward if we do any more training. So yeah, is there any other questions?
I do. As it relates to the changes in getting that business account, the local banks, or at least one of them anyways, they require articles of incorporation to have that business account set up.
I'll have to run that by Jason because I just thought that they had to. Last year we had trouble with people who didn't have a bank account, 1 or 2, but yeah, requiring a business account is an extra step and an extra probably, yeah, a little extra in other words. So I don't think that's going to be the case. Just the accountant, I don't know what follow-up they have in mind for the accountant or the tax services or the accounting software, but I think it was just having a legit bank account to start with.
And Mark,
So
I know our
not just because there's a difference.
Yeah.
They have checking accounts set up, and if they wanted a business account, I just had somebody come in. The bank required the articles of ownership.
Right.
And it was like $70 fee to do that, but
Oh,
some of
And I
them do,
know-
and some just have the regular checking account, so.
yeah.
I know our local banks here for a business account need the, like you said, the LLC or articles of organization plus a federal tax ID number. And that's free. And like Mark said, the other one is $70 to
Hmm.
even get a business bank account.
Yeah, I'd be willing to pay for that if that's allowable. So if it's required by us. But yeah, it doesn't seem too nominal, but not too big either, Mark. So I think that's maybe for the few that do get it, that'd be a clarification question with Jason and Leanne Taylor, et cetera. So I'll follow up on that. All right, we had a pretty good turnout for the NABAs, and just want to say really quick, go ahead and apply for the renewal of the NABA grant. It's due next week at the end of next week, and it's that $20,000 grant. So be sure to submit for that using Submittable, and we can get you going again for this next round. Last year was good as well, and yeah, looking forward to it this year again. So, hey James, do you have any questions?
Not at the moment.
Okay.
No,
So,
because I had all my questions out last year.
oh yeah, it was a good one. So yeah, this will be recorded. I got about 4.5 minutes left, Joe, and I think it goes to YouTube. When I send it to IT, I think they just plug them on YouTube, and I think I shared that channel with us. It has our past NABA meetings and stuff, quarterly calls on there, so it should be pretty good. Just want to say that, Maria, everybody, so Maria left to Island Mountain, Billy left as well to the Federal Reserve Bank of Minneapolis and Helena branch. And it's just the new hire, Taylor, I forget her name, but she's up in Helena too. Rochelle Brown, the tribal tourism officer. So we'll be making our rounds and making our site visits coming up soon. And we'll be contacting you if you want to come along and check out the fiscal year 22s. So yeah, 22. But that's all I have. We got 4 minutes left, guys, if you have anything else. Otherwise, that was a good
I
catch.
appreciate you doing it, Joe.
It's no problem.
Yeah, thank
And
you.
reach out if you have any questions. I'm here and gonna help you guys out.
All right, that sounds great, everybody. Thank you very much for tuning in and have a great day.
Thank you.
All right, see y'all.
See you,
Thank you.
Luke. Thank you.
Yep, bye-bye.
Thank you.
Pleasure.